Joining me now is Terry Harbort. He's the co-founder and CEO at Talisker Resources. Great to see you again, Terry. It's been a while.
Likewise, Mark. Thanks for having us on. Certainly some changes in Talisker and in the marketplace since we last spoke.
Oh, absolutely. I know that you've done some webinars with Red Cloud, but we haven't spoken, and some of our viewers may have not have seen you for a while. And actually, we spoke in December of 22. I had just started at Red Cloud back then, and now so much has happened, as you mentioned. We'll get to the stock, which has essentially exploded. But you're now producing at the Mustang Mine in BC. You're advancing a second mine with Olympus, and you're planning a mill as well. So, can you give us a brief overview?
Yeah, absolutely. I think since the last time we spoke, we came out with our initial resource, just under 1.7 million ounces, indicated grade of up at 8.9. We made the decision to transition into production last year with our first mine, the Mustang Mine. In the second half of last year, we brought that online and made our first gold sales. So very fortunate to be timing that perfectly with an all-time high gold, and certainly things have considered to be very good. We're under the ramp-up stage at the moment of being able to build out a platform of growth over 26, 27 and 28, ramping up here to 100,000 ounces of annual production by 28. So we're in the ramp up to 500 tonnes per day this year, then 750 in 27, and then 1,000 tonnes per day in 28, where we'll achieve that 100,000 ounce milestone. But our vision as a company is to grow beyond that. Really, our vision is to become a plus 200,000 ounce producer with multiple producing mines and develop the entire Braylorne district. And you may recall that we own the entire district, 33 kilometres of strike length, 14,000 hectares, and a whole series of historic producing vein mines. I think almost 50 historic producing vein mines. So things have gone very well here with our first mine, Mustang, under ramp up. And we're in the design and scheduling phases now to bring our second mine up into production within the next couple of years. It's to be called Olympus. It's about 2.5 kilometres from where we're currently mining. And you alluded to as well there, Mark, the mill. For those who are new to the Talisker story, we took a rapid and low capex approach of partnering with existing milling facilities that were close to us, initially with New Gold, then with Nikola Mining, and now we've just signed a very big, very strong ore purchase agreement with the global metal trader Ocean Partners for up to 1,500 tonnes per day. So that allows us to ramp up our production rate unfettered. We can go as fast as we like and build up a cash pool to be able to build our own mill, fund the development of our second mine, Olympus, and if all goes well, fund the development of our third mine, Congress, about 10 kilometres to the north.
Right, very thorough overview there. That's perfect, and then leads me to my next question. Just want to pick up on Ocean Partners and those three ore purchase agreements. My understanding is that one of those agreements is basically logistical, and correct me if I'm wrong, but they come onto the property and pick up the ore. Is that correct?
No, we actually we're in control of the ore until it arrives at the port. So we mine the ore, we crush it at a staging station at Lillooet, and then we transport the ore currently by a truck, but as we ramp up, we'll likely transition across to rail down to the wharf, and that's when it really changes hands. And then Ocean Partners, at this stage, I think they're moving it to Taiwan. They've got a big processing facility in Taiwan where they store and blend concentrates. So they're located all around the world, but I think our material will be going there. It's a new business for them that they're really focused on developing that business, particularly here in Canada, that really helps a lot of smaller projects that don't have the capex get up and get online, helps companies that have stockpiles or bulk tonnage samples gives them great flexibility in being able to process that. So I think it's a great business model, something that I think will do very well for Ocean Partners over the next couple of years. We do have an existing relation with them. They've previously been buying our gravity concentrate and our sulfide concentrate. So we know the group very well, and they've been excellent to work with, and we've got great terms and good logistics here to be able to transport and sell this ore.
All right, very good. Thank you for clarifying that. Now, Talisker has SGS Canada working concurrently on an updated mineral resource estimate and a PEA for the Braylorn Gold Project. And you said that you believe the MRE should be a lot more robust than the one that was done in 2023, in part because you'll be adding nearly 140 additional drill holes. So can you elaborate on this process?
Yeah, sure. Look, we've went into production without an economic study, external economic study. Of course, we had our own internals that supported our transition very robustly. We're looking here at doing independent study here with SGS. It's a division of the global assay group, so they've got a lot of divisions. It's a massive listed company and a very strong compliant report writing group. We're looking to add here a significant amount of resource, about between 800,000 and 1 million ounces to our existing resource. We'll have a large amount of underground drift assays, so there's samples that are taken during exploration development drives underground, about 28,000 samples coming in, and also bringing in about 30,000 meters of additional drilling that's been conducted in the last 2 years since our mineral resource estimate, our first one, came out. We expect to add probably about another 18 new veins, new ore bodies that'll come into the mine plan, and the mine plan will be focused around development of the two mines, so Mustang and Olympus. It'll be using our active economics, so the economics that we're using right now, our mining and development costs, our trucking costs, our milling payments, and our projected revenues. So it gives us a lot more scope to be able to give forward-looking estimates and guidance on what we expect our production to be and what do we expect our revenue and cash flow to be. So we're really looking forward to that.
On the financial side, Terry, the company seems to have no trouble raising money lately. Red Cloud Securities has been doing a lot of that heavy lifting, and one of these private placements went from a raise of $3 million and then right up to $14 million in short order, which clearly shows the demand in the marketplace and in your story. And you've also said that you really want to take advantage of this gold window, make hay while the sun is shining, so to speak. So as part of that, and you alluded to it, you're really trying to accelerate the development rate of the company. And am I right in saying you're almost sort of pushing it, pulling it forward by about a year or so?
Yes, look, we always have to evaluate very firmly additional capital. Coming with additional capital is always the impact of dilution on the share price as the company goes forward. So as management, we always have to have a look as well, what can we actually achieve with that additional capital? Fortunately, it's worked very well. With our growth plan, I think that raise you're alluding to was done at 50 cents, and now we're trading over $2. So that's excellent use of capital, us being able to apply that to accelerate faster. Much of that capital went into the development of what we saw as our development bottleneck, which was the development of the Braylorn West decline access ramp. It's a 4x4 development from where we were currently starting to mine at Mustang across to Braylorn West, so a little bit over 600 meters worth of development. And we brought that right forward. We've only got about a bit over 200 meters left to do We expect to have that critical development completed by the end of first quarter, early second quarter, so that allows us to open up that whole new area much sooner than we originally had in the plan. So I think that's worked out very well of discreetly applying capital from good long-term investors to be able to accelerate our growth plan and grow the company as fast as we can.
Very strong team, and some successful exits, as we know, such as with Barkerville. So we also know that M&A is picking up in the sector. We're seeing more and more deals, some of them in the $1 billion plus range. So I know you can only say so much, but are you attracting some interest? Are you getting some inbound calls, some knocks on the door kind of thing?
Mark, with a project the caliber of Talisker, there's a fairly constant stream of knocks on the door. We have to really temper that while we're in the growth phase, because really we think the best value that we can bring shareholders is by growing the company at an exponential rate over the next couple of years. So we're happy to engage with potential acquirers or offers for mergers and acquisitions, but we really have to evaluate that based on what the value without that is that we can bring. And at this stage, it's certainly a much better value proposition that we continue to grow as fast as we can. We continue to develop mines, and we ramp up our production and our total ounce profile. Really, even if we could sell the company at 100% premium, which shareholders would be happy when shareholders who invested this time last year have done a 5, 6, or 7 times growth with our current strategy? And as we continue to develop to 100,000 ounces and then to 200,000 ounces, when we look at comparable companies, 100,000 ounce producers, comparables, it puts us in the $3 to $4 billion valuation range. And if we're successful in our plan to go to 200,000 ounces, that puts us in the $7, $8, $9, $10 billion range. So really, we think that's a very strong and robust pathway and can bring a lot of value in the medium term to our shareholders without having to give up the company through an acquisition or merger scenario.
That's fascinating, and some big numbers as well. And the team's got the nose to the grindstone, and you want to make your shareholders happy. And it's obviously you laid out a scenario there where it'd be premature to take any offer right now. So let's wrap it up here, Terry. Just looking at the stock. So we spoke, as I said, in the fall of 22. Stock was trading about 70 cents back then. It actually got as low as below 30 cents as the gold market really hadn't taken off yet, and the juniors hadn't taken off either. I've got the stock up now year over year, 537%. Very robust. We've got gold near a record high, pulling back a bit today on the Iran news, but we know the run it's been on. So can you use that as the backdrop for us and give us, again, you've been hinting at them, but summarize your thoughts and if you could, and give us the main catalyst for the investment case for Talisker Resources.
Yes, look, we're very fortunate at this stage to have made the transition to production with a strong gold tailwind. The major jump in our share price was when we announced our first sale of gold, so proof of concept that we were one of 1,000 companies that makes it through that transition, that very difficult transition from discoverer through construction into production. So our team's very proud of making that transition, and the market's very strongly rewarded us for that, and we believe will continue to reward us as we continue to grow here over the next few years. Really a lot of catalysts coming out in the midterm here for Talisker. In the short term, a lot of drill results coming out. And a lot of these will just support the consistent nature of our ore bodies and what we're going to be mining. Our PEA coming out here in second quarter, significant milestone, and will add significant value, we believe, to the company by adding between 800,000 and 1 million ounces is our current estimate into our resource base and into our mine plans. We're also in the process of implementing ore sorting technology. It's gone very well. It's a laser-based ore sorter that's used to remove the waste material from our mined rock. So we're expecting here to see a reduction of tonnage material by 40 to 50% and associated cost savings. In addition to that, it'll also increase our grade by removing that waste rock by between 80 and 100%, which increases the payable that we have going forward. From a production perspective, our systematic ramp up here will reach 500 tonnes per day by third quarter next year. Fourth quarter is a very strong year with significant cash flow coming from that quarter. The first 6 months here, very development and drilling heavy as we lay the foundation for growth over the next 2, 3 and 4 years at the Mustang Mine, and start to do the planning and development work to bring our second mine online, and then look to build a cash pool so we can initiate the construction and implementation of our own mill and be able to develop the entire district that we own around the Braylon Gold Complex.
Very nicely laid out for all of us here, Terry. It's been great to see you. Congratulations on all the success, and we'll talk down the road.
Thanks very much, Mark.
Terry Harbort, co-founder and CEO at Talisker Resources. Our thanks to him, and thanks to you for watching. We'll see you next time. Take care.